Michael Saylor is the co-founder and director of MicroStrategy. Founded in 1989, Saylor is a software and IT services provider, technology entrepreneur, and cryptocurrency guru. A nickname well earned by numerous interviews, where Saylor claims that Bitcoin is the future of the economy. A technology lover and fervent admirer of Bitcoin, Saylor does not lose faith in the most stable cryptocurrency, despite its multiple crashes in 2022. Cryptocurrencies are known to be volatile and unstable, as well as unsupported and insecure. Yet, there are those who don't let that scare them away. Michael Saylor is a Bitcoin fanatic gambler, who, despite falling and falling, does not lose his enthusiasm for the most stable cryptocurrency on the market. Bitcoin is a controversial topic for many. It is the eternal struggle between the past and the present. Many people will tell you that it is not reliable, and they have good reasons. Some people still do not understand, as it is a very intangible and difficult world to understand. However, there are those who have great faith in it, and do not doubt its growth and potential in this day and age. Today's topic is framed under this controversial discussion, since among those who are in favor of it is the millionaire Michael Saylor, who, in one of his interviews, said that, quote, "If Bitcoin does not reach zero, it will reach 1 million. That is a very strong bet." Saylor is convinced that it will not go down to zero, that you have to look at the long-term investment, and he is sure that in the next decade, the cryptocurrency will be valued at $1 million. At the 2022 Bitcoin conference in Miami, Saylor spoke alongside ARK Invest CEO Cathie Wood, and left positive comments, arguing that the environment has never been more positive for Bitcoin. The focus is on a long-term perspective, where regulations and people's understanding of the issue help Bitcoin and the world of cryptocurrencies to resurface. In fact, Wood laid out a prediction made by her firm, which states that by 2030, Bitcoin will reach $1 trillion. Bitcoin's price was affected throughout the month of May, reaching lows not seen since the end of 2020, resolving investors' doubts and fears with its sharp swings. Just as the stock market was hit by inflation thanks to the Federal Reserve being forced to raise interest rates, in addition to the removal of Terra and Luna. Although Michael sees this glass as half full, the acclaimed regulations come after the exclusion of one of the market's most stable cryptocurrencies, UST, and its backing coin Luna, to which Saylor believes, quote, "That will be good for the industry," he said. Quote, "Over time, I think as people become more educated and more comfortable, I think we will recover from this reduction." This event, while tragic for the crypto market, helps authorities act quickly with regulatory clarity. Terra and Luna are stable cryptocurrencies, better known as stablecoins, and are those that are designed in a certain way so that their value suffers as little fluctuation in value as possible. There are different solutions to achieve this. One of them is to link it to a fiat currency, such as the dollar, euro, etc. Another is to refer it to a commodity such as gold, and another is to refer it to another cryptocurrency such as DAI, and finally, controlling its price through algorithms. The collapse began when its UST token lost parity with the US dollar. The loss of parity used a chain reaction in which UST plummeted to 9 cents, a far cry from being worth $1 as it should have been as a stable coin. Its sister coin, Luna, experienced a much steeper drop, going from a price of $82 on the 5th of May 2022 to $0.0001523 at the time of writing. For now, Terra's blockchain has been mothballed until a recovery plan is planned and developed, if the project can ever recover, because at the moment there is a lot of doubt, and the crypto market is suffering the consequences. Terra and Luna support each other. Traders should accept the low-risk profit accrued by the arbitrage taking place on the different platforms. However, this was not the case. Terra's blockchain and its coins depended on investors who always wanted to exchange the two coins. When that alliance ended, everything collapsed. The proposal by U.S. Senators Cynthia Lummis of the Republican Party and Kristen Gillibrand of the Democratic Party aimed to regularize the currency to provide innovation, flexibility, and transparency to the consumer, including stable cryptocurrencies as a form of payment in the country. On Tuesday, the 7th of June, the bill was introduced, which addresses issues related to Bitcoin stability and taxation and the relationship with government institutions. The use of Bitcoin and other crypto assets as an everyday currency is the most attractive aspect of the bill. One of the objectives of the law is to, quote, define and create requirements to protect consumers and markets and promote faster payments. When regulated, it is hoped that there will be greater confidence in those consumers who move away from cryptocurrencies. An important point for this would be that they are 100% reserve-backed and must specify which one, so the user can switch at any time for their underlying asset. Lummis says, quote, integrating digital assets into existing legislation is essential to ensure better opportunities for the next generation of Americans. It is important for Congress to legislate to promote innovation while protecting consumers from malicious actors. But all regulation comes at a cost, i.e. taxes, which you will have to pay if you buy more than $200 worth of cryptocurrencies. This minimum guarantees not to be accountable to tax offices. The law also establishes peculiarities are commodities and suitable, which are the values of furniture. The keys are in their purpose. Companies must assess to render tax obligations to one or another entity. That is, those considered as commodities will be regulated by the Committee on Agriculture, which oversees the Commodity Futures Trading Commission, or CFTC, and those considered securities will be regulated by the Banking Committee, which oversees the U.S. Securities and Exchange Commission, or SEC. That cryptocurrencies are protected by law means not only that they can be used freely in business, but that they are safe to use in terms of cybersecurity to avoid scams. This bill puts the SEC and CFTC to work together with the National Treasury and the National Institute of Standards and Technology to create strict rules and principles to prevent them, in addition to assessing the risks of money laundering and terrorist financing. This bill is not the first attempt to regulate the world of cryptocurrencies. However, this bipartisan proposal is promising for its breadth in the legal framework. It is more comprehensive and detailed. Now, it must be passed by Congress. Let's hope it does. Cryptocurrencies can be volatile and unstable, even star coins, and can collapse at any time, but there are still entrepreneurs betting on them. And if regulated, Michael Saylor's wishes may come true. MicroStrategy's losses exceed $1 billion with the recent crypto asset crashes, but Saylor has no plans to sell a single Bitcoin. Michael started betting on it at the end of 2020 and has so far spent $3,970 million in less than 2 years. His conviction is strong, and faith is the last thing to go. The lauded economist Peter Schiff predicted a few days ago the latest crash. Quote, as the recession continues, economic conditions will not only deteriorate, but there will be a financial crash and the price of Bitcoin will plummet to $20,000, while the price of ETH will fall to $1,000, and advises against buying Bitcoins at this time. Now, he claims it will continue to fall to $10,000. Quote, many Bitcoin holders will be forced to sell to break even, as gas stations and grocery shops will not accept BTC. Perhaps if the bill is finally passed, cryptocurrency users should not sell to break even, and the price will stay the same or perhaps rise. For now, it's on hold, and maybe Schiff is right. In any case, Saylor seems to have a plan in the face of Bitcoin's falls. In May, he said in an interview on Bloomberg that if the price dropped to $21,000, he would trigger a margin call on a $205 million loan from Silvergate Bank to buy BTC. And recently on Twitter, he warned his followers that he would not sell, even if the price fell to $4,000. The entrepreneur has faith that Bitcoin will rise to $100,000. Quote, when MicroStrategy adopted a Bitcoin strategy, it anticipated volatility and structured its balance sheet so it couldn't sell during adversity, he wrote. Despite the contradictions of others, Michael Saylor is not giving up hope. What do you think? Would you buy at these prices? Leave your comment and like if you liked the video. Be sure to subscribe if you're interested in topics related to cryptocurrencies. We will upload more content like today. Thank you very much for joining us today. See you in the next video.